Good afternoon. Welcome to Thursday's first of the two lunchtime sessions. We've got Zohan on the mic with me today. And so it's taken a while getting the sound going. So unfortunately, it's going to be a bit of a shorter session because Zohan's got to jump onto a Zoom call himself at the top of the hour. But we've got plenty of time here. So let's crack off on this session. So Zohan, just to introduce him to you all, most of you know who he is. One of our members, but he's also the person responsible for the app. So if there's anything you don't like about the app, then he's free game. But yeah, he built and designed the app for us, and he made our website as well. So, but really, where I want to go through with this is about 18 months. Was it 18 months ago, Matt? I don't know why I've got it in my mind.
It's about that, yeah.
It was about the October, November of 20. Yeah. So about October, November of 2022 is when Matt you'd been involved in the markets, but it was when you had finally just that little bit more time to do your own, start looking for your own trades and doing all that. And so we started doing some work together around that sort of time. We were just doing regular, every couple of weeks or so, doing a call and seeing how we could get on. So really, Matt, I wanted to start us off first of all about where you were going into that period around that October, November time when we started working together, and just some of the hurdles for you and milestones mentally more than anything else, some of the things and some of the reflections on where you were there and where you are today, from just holistically from where we were at that point.
No, absolutely. So yeah, as you said before, I'd already kind of been around for a while. I'd been part of CBT and obviously prior to that as well for a little while. But I stayed on paper trading for quite a while because at the point where I was thinking about starting to do live trading, I had some other things that kind of diverted my attention and finances and stuff like that. So I was paper trading for quite a while and kind of thinking I'm building up this confidence, right? And then when at the point where my personal situation changed and I could actually go, right, I've now got a sum of money that I can devote to actual live trading, it's like getting hit with a sledgehammer to realize, wow, when it's real money, it's different. It doesn't matter how visually paper trading or the demo accounts look, when it's actually your real tangible money, it does have a big difference mentally, right, to how you're looking at trades. And it's very safe saying, we'll probably cover this in a little bit as well, I was very cautious at the start of wanting to have a bit more certainty, but what if I place this trade and it rolls over? And I needed that certainty, which I've now later found out you really just don't get. Not the level of certainty I was after, right? So I was a very cautious, almost fearful trader, really. So yeah, that's kind of where I was, at those early stages when I finally made the jump into a live account.
And then it was interesting because, through our regular calls, we were having to, obviously we were going through the technical stuff, but that's fine. That's just the technical, bits and elements, but, of analyzing and even getting your eye in initially for things like divergences. It takes a little bit of time to get your eye in for some of these things. Well, what makes this divergence better than another one? And all those little subtleties. But again, what kept on rearing its head was this need from you at that time. I needed you to let go, didn't I? And say, look, like you've just said, well, there isn't that certainty. So was it just time that helped? The more that you, because the penny dropped at some point where you're like, okay, I get it now. And I remember us
Yeah.
having that conversation. But can you recall that? Where at what point you
Yes.
said, mm,
Yeah. Yeah. No. Absolutely. Absolutely. I mean, so I think, and it's not so much. It was funny. It's this. I think most people have an inbuilt desire to be right, or maybe not a desire. Probably even stronger. It's a need, right, to be right on
yeah,
things. And I think that drives probably even the need to be right even more so than losing money, for instance, right? Um, so I was always, every call we had for quite a while at the start, it was, we'd go through, like I say, some of the technical stuff, but then it was a lot of, right, well, I was always looking for more confirmation. Well, I want to enter long here, but I want to wait until it gets till it breaks this high, or wait until it gets above the bands, or wait until it gets above this. So by the time I was getting in, my risk reward was awful, right? Because I was constantly wanting to find that confirmation, getting extra confirmation, extra confirmation. Um, so my account was just, it was flatline, right? It wasn't really going anywhere. It went down for a little bit as well at the beginning. So especially at that point as well, especially when I kind of felt like, oh, I've made all of these wrong decisions, that kind of reinforces, well, I definitely need to be right on the next one. Because I've made like 10 wrong decisions. I've had 10 trades go the wrong way. I need to have a correct decision. And in fact, we had a couple of conversations where, when I did have some, a little bit of a streak of winners, and I was saying, okay, I think I'm comfortable with the trade size. I'm now I want to add into my account, because obviously I'm still at the stage where I'm wanting to build my account equity. So I was
mm,
like, okay, so I want to maybe put a little bit more money in and trade bigger, because I was comfortable with the size of the trades, but I still wasn't comfortable with making the wrong decision, you know? So I
yeah,
was like wanting to add in, but I kept saying to you, didn't I? I kept saying like, oh, well, I'll add in once my account is this size. It was like I need confirmation
yeah.
before I can add in. I wanted confirmation on everything.
Well,
So yeah,
at that point, it was fascinating because I was saying to you, no, don't wait, because you
yeah,
wanted to. It was this point where you needed to prove to yourself, sort of thing,
yes,
from a monetary perspective. But you'd already taken that initial dip, when you first started, and and what I was trying to say to Matt at this point was, look, your analysis is good, and that was the main thing. The money element wasn't, that was fine. You were plodding along, you're doing what you're doing, but you wanted the money, the account to give you that confirmation where I could see that your analysis is fine. The
yeah,
analysis is the important element, the process, not, but again, by the time you wait for your account to go up, well, you can do that. But I don't think, I'm saying to you, I like the way you're analyzing the market, just a few little tweaks here and there. And you don't need to wait for that as well. Because, like you'd said at the time, it was a relatively small account, and that because that's a good way to start. And I didn't feel like you needed to wait. But again, it was that, I guess for you, it was that, oh, I need that certainty, if you will, whatever you want to call it.
yeah, no, absolutely. And I think one thing that helped as well is the realization because there was one point where I took your advice. I was just like, right, I'll just add some more into my account and just deal with it, right? Um, and and I think it was the point where you've got to just get comfortable with losing trades, because you're going to lose more most of the time. You're going to lose more trades than you win, but it's all about the risk reward. It's all about risk management and everything like that, to make sure that the percentages are correct. Because as much as someone can say to you, do you know what, it's fine, let's say, these aren't real numbers, but you're going to go and say, right, you're going to lose 10 quid, lose 10 quid, lose 10 quid, lose 10 quid, make 100, right? Lose 10 quid, lose 10 quid, lose 10 quid, make 200, right? So you're losing more trades. And I think that's the side, because you're going, well, I'm losing more trades, but yeah, the winners are bigger, so it makes up for it. And I think it's just a switch in your brain that you kind of go, oh, well, that's just how it goes. You've just got to trust that process, that's how it works. And when you've had those couple of losers, just don't change what you're doing, you know, to the point, and we might go through some examples on this Aussie New Zealand, but, you know, I had some times where I went in long and it just rolled over again, cut me out. But then as soon as I saw the trade set up again, I'm back in, because as long as you don't change what you're doing, then, as you say, the analysis, and if you've got that confidence in the analysis, and that was a big part of it. Whenever I was doing analysis and showing you, right, this is what I'm saying, these are the levels, this is what I can see. Every time you're saying, yeah, well, look, your analysis is great, so that's good, and that helps build your confidence as well. So I think it is that for me, it was building the confidence that I've got good analysis. That's a big part of it. And I think the other side of it as well was just getting comfortable with the small little losers, because that's just, you know, and also one thing I did do, I think, on your advice, because I was always getting in, my kind of minimum was just a 0.5%. And you said, well, why not just do an absolute toe dip, do a 0.2% risk if you're, you know, and then as soon as it gives you that first level of confirmation, add the rest of the half of the positioning, because then you're in. So that's what I started doing as well. So, you know, changing your initial trade size for really
Yeah.
small toe dip that you know, okay, if it rolls over, it's fine. You can do 3 or 4 toe dips to then finally get the one that then goes and follows the you know, the plan that you've got, right? So yeah,
Yeah.
that's a big part of it, I think. Yeah.
Yeah. I think I remember, you know, like you said, it was a combination of things. I think
Mm,
sometimes, as you said, it's a belief thing as well, you know. And once you'd seen it, like you said to me, you said, I've seen what you do. And
yeah.
then all of a sudden I see your big wins come in, and that helped you with your beliefs around that whole concept of loser, 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 big win, you know.
Yeah.
And so for everybody, they're going to have a different lever, a different event that all of a sudden, like, the penny drops, and you're like, I'm starting to get it. And like you said, by not putting as much pressure on the initial trade, i.e., by going in at whatever it was that you said, like toe dipping anyway.
Yeah.
The initial pressure isn't there to be right as much, because if it does just roll over, okay, fair enough. But then if it starts to go, okay, now, you know, I'm seeing a bit more now, right? Okay, and then I can build the position. So
Yeah.
I guess it's a combination of things, but yeah.
Absolutely. And having that initial toe dip as well, I think helps change your mentality, because
Mm,
it's a different mindset when you're in a trade to when you're deciding when to get in. So by making the initial trade very small, just that little toe dip, it takes the pressure off the whole, oh, I need to time this right, or I need to get it right, or I need to be right, because it's only small. And then, so if
yeah,
it's an easier decision to get in, once you're in, again, it's different to the whole before you're in, if that makes sense, you know? Or at
yeah,
least that's
yeah,
what I found for me anyway. Once I'm in, it's easier to kind of go, oh, well, I'm in now. Now I'm just managing it. Now I'm either adding in or whatever I'm doing. I'm not making that decision of, am I even getting in the first place? Which I think, for me anyway, was always a different decision.
So let's talk a little. Perfect. So let's talk a bit about your obsession with, as Beamer was mentioning, as Sue said this morning, but Beamer was mentioning last night, my obsession with Euro, but then that's easy for him to say when he's obsessed about cable.
Yeah.
And we can now talk about your obsession, which is the
Yeah.
Aussie New Zealand.
Yeah.
So actually, I've just taken the chart back here to the latter part of 2022. So I think, and this so often happens, that a trader has a good trade on a particular market, and then that market remains attractive to them. And I think
Yeah.
that's what happened. Was it a short? Was it through here, or was it through this long from December? Can you remember?
Oh, the very
I think it
first
was. I
one.
think it might have been the long, actually, off December. I
Yeah,
think
no,
maybe.
it was definitely a long.
That
It
was
was
it then.
definitely a
December
long.
22. Yeah.
Yeah, that probably sounds about right. Where are we here? Yeah, that's right. So,
That
and
was
that was
here.
the thing that got me in. Yes, this was it. Because actually, I got in there. Right, let me scroll my chart back as well so I see. Right, so yeah, I got in around sort of somewhere. It was near the lows actually. I think I got quite a good position. Um, but at the time, I was trailing my stops up a bit too aggressively, and I got stopped out. I made some profit, but I got stopped out when it dipped down into sort of January,
Yep.
January 23, right?
Yep.
Because I think in those early days, I was just too aggressive with trailing my stops as well, wanting to kind of lock in that profit, right? Um, Whereas if I'd left it, it would have then carried on rolling up, and then it got to some bigger targets. Because I think, if I remember rightly, my target back then was the 200.
Okay.
If I
Yep.
remember rightly, yeah, that was my target. So I was trading it up, got stopped it out, and then I got back in, but that was pretty flat because I just didn't get the right risk reward. And that's something I've learned as well. I think entry is so much more important because the better risk reward, the smaller stop
Yep.
you can have, it has a compounding effect, right?
Yep.
So that's where I got in, and I think it was what got the bit in my teeth for that is because my analysis was right, but how I managed it with moving my stop up, it was my fault that I didn't get the most amount of profit out of it, right? And I think that's what got the bit in my teeth because it was my mistake, because it did ultimately get up to the 200, and I didn't get
Yeah.
all of that profit because of my stop loss, trailing my stop loss up too much. So I think that's kind of the start of the whole journey with this one. And to be honest, then I check it like all the time. I think I said to you before, even my phone, I get Siri suggestions saying I haven't checked it lately. So Siri tells me to check it. The old Siri
That's brilliant.
suggestions. I literally get it for Aussie New Zealand most days.
That's awesome. I
Yeah.
think okay. So yeah, so since then, you've been active in that. You do trade
Yeah.
obviously euro and some of the other markets as well.
Yes.
But
Yeah.
from your own analysis, this is all yours, and that's what I like about that over this past 18 months, whatever.
Yeah.
And as we know, the Aussie New Zealand has chopped in this wider range. Really, if I zoom this back on my chart here, we can see that over that past, look at 2023. From that point, it's been quite a overall choppy range. The
Yeah.
big picture analysis is fascinating with it, as you and I have done a lot on it.
Mm.
But so it has been going back to the daily charts. There we go. That's back to December 22 there. So it's been quite range bound overall. And so although you've had some nice wins out of it, of course, you've got caught at times as well. And so what I think is fascinating with this one is that you've wanted to persevere with it, even though you could have gone off chasing markets in different trends or whatever. So how have you dealt with that element of it?
Yeah. So, I mean, there was a point, I think there was a couple of times where I've said to you, should I be looking at others and should I be doing this? But I think there's definitely there's a lot of merit, I think, in just getting obsessed or just really involved in a single pair. Um, and I really like this one because the thing is, so I do euro trades, and follow a lot of your calls on the app on things like the euro and the S&P and stuff like that, right? And they're very trending at the moment. Whereas this is a different market. This is range bound.
Yeah.
So it's kind of a different way that you have to trade it. And for me, because my trading journey, I've got quite a long-term view of my trading journey to be able to, I've got things like pensions and stuff like this, but I want to, for me, manage some of my own funds and my own money. So I've got a long-term view. So when years ago, when I first decided to start doing this and start, looking into finding a mentor, My mindset's always been that I don't want to just be able to copy someone that if then my mentor goes and retires on a beach somewhere, I now don't know how to trade. So my mindset is, yes, I want to mentor, which is where I found you. And I want to pull all that information from them, but then I want to be able to do it where if they go and retire, I've now got the skills to be able to do this on my own. So that was part of my reason as well for wanting to do something that is a bit different. It's range bound, so there's different analysis that you have to do and different ways of trading it. So it's almost forcing me to be able to build up that skill set without relying on your trade calls. So that was definitely part of the decision as to why I've stuck with it. And getting that involved, you do see little nuances and different ways, you might see a divergence, but then actually, like I think it was the other week, wasn't it? There was divergences, and I think I commented in the room. And yeah, when something is just going up, you might see divergences that gets ignored. But that divergence actually was the start of where we had this retracement the last couple of weeks. And I kind of noticed that. So I was like, mentally prepared for like, okay, this could come down. And actually, ironically, I've added another long position in the bottom of this recent retracement. So yeah, I think when you get that single-mindedness on a single pair, you see things that you wouldn't if you're scanning loads of pairs. Because I think at the beginning, my mindset was wrong in thinking, well, if I'm looking at 5 or 6 pairs, surely I'm going to find more opportunities for trades. So I was thinking it, and that's the mindset. It's different trading from having that work mentality. If I work harder, I'll be more productive. And that just isn't true with trading. It really is. You've got to work smarter. You've got to improve your mindset. You've got to improve the skills and how you look at the markets and how you look at the trades, rather than just saying, if I do more, I will get more. It just doesn't work. That's where you get into sort of, FOMO trading and stuff like that, because you're just doing too much. Focused analysis on one, for me anyway, and granted I am still very new at this, so but what I found for me is focused analysis on this one pair is definitely benefiting me more than if I was looking at 2, 3, or 4.
Well, I mean, just to offer the other side of that is, everyone's different, and so this is what as we always say in trading, it's such a personal journey and for a lot of people, it takes time just to appreciate something like you've just said. You now, as I often say, know thyself. You need to understand yourself and what's good for you as a trader. So for someone else, they might say, actually, I prefer to be in, regularly 4 or 5 positions, but maybe with much smaller position sizes, and they quite like doing that. But I think the main point that you've said is you found who you are as a trader and what suits you as an individual, much like many of us. And so, and that's what I like, I like that. And like you said, because you're tracking this a lot, you'll see all the nuances, and some of those nuances, someone like myself who's just, I'll always pull up Aussie New Zealand on a Monday and and do a bit on it at that point, but I'm not tracking all the way through the time frames all of the time and keeping an eye on it like you would be, because you're active in that market. And I think that that's where you're saying that for you, if you cast your net too wide, you would probably then start to miss some of those things, or maybe even it would affect your decision making.
Yeah, no,
because
totally.
your
And also
distractions elsewhere.
Yeah, no, totally. And also, I think for me as well, and like I say, what I said about the whole just being hyper-focused on one, it is definitely for me, because also I think everyone else's non-trading life is different. For me, I can't do this all day because I've got quite a mentally challenging job as well. So I check it in the morning, I check it when I finish, when I finish work, and I do analysis on Sunday and stuff like that. So I am very string trading. The time limitations that I've got to do this are also part of that, So other
How,
people who maybe only have part-time jobs, or maybe they're retired or whatever, that have more time to do this, maybe could be
yeah.
looking at a few charts with that amount of intensity. But for me, I just can't. So everyone's
That's a good
scenario is
point.
different, right?
Yeah,
Yeah,
that's a good point. And actually, you've just highlighted something because if you remember, Matt, at the beginning, you were sort of doing your analysis, your daily analysis after work each night. You'd sit down, and you had a good, you were pretty disciplined with, right, I'm going to check the
yeah,
markets for 20 minutes every night, whatever. And what we introduced was basically, do you remember, right, get out of bed 10 minutes earlier,
yeah,
and do that so you're at least getting, for someone who's got a full-time job like yourself, you're just getting out of bed that little bit earlier in the morning. So it's giving you the chance to see the overnight moves. Because remember, there was some divergences and setups that you were missing out on because you were only
yeah,
looking once every sort of 24 hours, as opposed to right, there might be something setting up, and then you can at least set some reminders or alerts up so that you could, in theory, just pop a trade on halfway through the day. You're not analyzing because you've done all that at the beginning of the day, but at least it's there and it's in your, to an extent, it gives you that opportunity by doubling up the times of day there.
yeah. No, absolutely. And I'll also, as well as putting an alert, if I know I want to kind of double check it before I put the trade on, I'll put an alert. But actually, quite often I'll just put an order in as well. So if I'm checking it in the morning and I'm like, right, if it pushes past yesterday's high, for example, this is just then I know I want to put half size trade in. I'll just put it in as an order and then not even worry about the alert. I'll look at the end of the day and realize if it's triggered or not, or I'll get an alert on my phone to say it's triggered. But then I don't even have to log in to place it. It's done. So I'll do that in the morning as well now.
Yeah.
Yeah.
So let's talk about just this latest one, because uh, this run, it started from a divergence, but I know because you told me at the time. Again, it was
Yeah.
that same philosophy towards it. So it started out at what the 8 hour time frame, wasn't it? 8 and maybe the 6 as well.
Yeah, I think it was the 6, 8, and 12. I'm just checking now. Yeah, there was 6, 8, and 12-hour
Yeah,
divergence right at the bottom.
yeah,
And yeah, my initial position was like a 0.2%, because at that
yes,
point there was a lot of pressure for it to push on down the low because it's just broken
yeah,
out through a pretty sizable trend line. So there was a
yeah,
lot of pressure for it to go down. But my overall long-term analysis was still to the upside, and I probably do have an upside bias, but my analysis was to the upside. So I was looking for excuses to get long. So yeah, so even though there was a lot of pressure for the downside, and that's why I put in that very small position. Yeah, it was like a 0.2% risk. Yeah.
and then so you would have got in pretty low down here because you got off the intraday chart somewhere
Yeah, I got
down
him very
here,
low. Yeah,
fairly low.
yeah.
So, and then you would have just started to incrementally add. Can you remember the rationale? If I take this to maybe just to an 8 hour chart,
Yeah.
can you remember any of the sort of rationale as to the sort of levels and things you were looking for you to start to build that position?
Yes. So this is where I think once I was in, I think at times I was still looking for a little bit too much confirmation. So some of my add-ins probably could have been sooner. But I know I took, so I added in, let me have a look, because actually some of them I've closed now where I've been taking some profit off.
Sure. Yeah.
So I added in when it hit the upper daily band. And then, so that was then the full half position. So I had a 0.2% and a 0.3% when it hit the daily upper band.
So that was interesting. It looks
And
like it hit it and then came straight back down.
yeah, I know. Yeah, yeah.
Yeah.
Yeah, so it did. It hit it, came straight back down, and I was, at that point, half position, so, but then when it came back up, I put the other half in. And this is where personally I think I left it too late. I put the other half in when it broke the trend line. You've got a dotted trend line. Mine I think is in a slightly different place, but pretty close.
Okay,
But I
somewhere
put
up
the
there.
other
Yeah.
half in, somewhere up there. I put the other half in when we broke that trend line, because I was still a bit cautious of, okay, we could just react off that trend line because there is a lot of downward pressure. It could be going down. I wanted that extra confirmation. I could have got in sooner, which I've now got another account, which I'm sure we'll talk about in a minute, which is kind of part of my mindset for that. But yeah, so that's why I put the other half in when we broke that trend line. And then when it kept moving up, I've got another 3 positions in at the moment on this one, because then when it was comfortably above it, and especially when it carried on moving up past the 50, the daily 50. I moved the stops up and I got a couple of extra positions in there as well. So I got some extra positions, one just below the 100 and one just above the 100. I got a couple of extra half positions in there because I'd moved my stop up, so I had a bit of leeway to do that.
Okay, great. And so again, all this was part of your development. I remember our early calls and like me saying to you, you don't need to be in lots of trades. If you get into a trade and you get to build it and add to it, and that sort of stuff psychologically is quite difficult, isn't it, to add in, because you think, oh God, it's already gone up a lot now, I don't want to add in. I'm comfortably in profit and I've now got to basically relinquish that open profit by putting a new position on.
You've got to risk what you've just made, right? Which can be a challenge, because if it rolls over and you're like, oh my God, I was in X amount of profit and I just made some silly mistakes. But again, you've got to I think for me, it's being comfortable and having confidence in your analysis, right? If I'm comfortable that I've done absolutely everything I can to have good analysis and make good decisions, well, the outcome's the outcome. That will happen regardless. But as long as I can make good decisions based on my analysis, I think that's the part that's giving me the comfort.
Yeah, absolutely. So you've just highlighted something. So what you did a while back, or quite a while ago now, you did add to your account. You started off with your account as it was. Then we got maybe 6 months in, and I said, you really should add to your account. Don't wait. You're doing all the right things. Don't wait to make, because you were sort of right, once I've made 15%, then I'll move it up, that type of attitude. And I was like, no, don't wait for that. Just get on. And but moving on from that, we had a conversation not that long ago, only maybe a month or 2 ago, where you said, I wouldn't mind doing my own challenge.
Yes.
And so you've started that now as well, haven't you? You're a little mini account challenge type thing.
Yes, because I think for me, like I said a little bit earlier, I do think I'm still a little bit too cautious. I think I'm still a little bit too conservative. I'm comfortable with where I am with the trade sizes, with my analysis. But I do still have that little bit of, I need a little bit of extra confirmation, So I think we're talking to you, and it was an idea I wanted to run by you, and you were like, yeah, go for it. I've basically started my own little challenge account, which is a very small account. So I've got a second account. And my goal is simple. My goal is to double the money that I've got in there. I haven't set myself a time frame. It's not like, when you did the challenge, double it in a year or 2 years, whatever it was. So I haven't given myself a time frame, but I have given myself a goal of doubling it. And the way I'm doing it is, the overall analysis is the same, but what's different is being more aggressive in getting in a little bit sooner, and then adding in a little bit sooner. So actually on my challenge account, I've got already on a full position in the Aussie New Zealand, which basically I got in on the lows of this recent
Yep, pullback.
retracement here. Yeah, the pullback, the retracement. Yeah, sorry, my brain went blank then. And that was basically, where was it? I actually got in and I got stopped out twice because I was a bit too aggressive. So I had two little stop outs, and then I got in. Let me go on to the account so I can see exactly where. Literally, right out at 1089.
Okay.
Yeah. So I got in, a pretty good position. And then, there was a little bit of confirmation there. So I got in there, and then I've also added in already when it broke the most recent high. So I'm in a full position there. And then if it does go a little bit higher, I'm planning on putting another half position in. So my strategy with this is being a little bit more aggressive with my entries, and also, if the trade is going, having maybe more risk than just because at the moment I don't risk any more than 1% on my main account. But in my challenge account, I'm going to be okay with maybe risking 1.5% potentially, or that I'm going to see maybe 2%, maybe 1.5%. I'm not fully decided, but I know that I'm just wanting to be a bit more aggressive, so that I can see, okay, what's the difference when I'm being more aggressive? Because what I don't want to do is get to a point where I'm being super aggressive with my main account and having massive, fluctuations in my equity curve. So it really is, for me, it's kind of a training tool. Yes, it's still money, it's still a live account, but because it's small enough that I'm comfortable with risking more to see how I can make my trading more aggressive and therefore hopefully more profitable. So for me, it's a training tool, and I think it's part again of my development, my mental development as a trader. Because like I say, you can do this stuff. Sorry, go on.
Well, I was going to say, who's to say, that in the next 5 years, which, as you know, when we think 5 years ahead in trading, we think, oh, it's an eternity away. It really isn't.
Yeah.
Because you look back 5 years and you think, oh, yeah, it's not that long. But in 5 years' time, that small account won't be that small anymore. In relative terms, and that can carry on riding alongside your main account, because it sort of satisfies that itch, if you will, to I'm a bit cautious on, but you get to satisfy that scratch by doing that simultaneously. And like you've just said, so even if you don't go bigger than, let's say, 1% risk per trade, the difference is that you're getting that 1% into the market that bit quicker than on your main account, where you're waiting for a bit more confirmation or whatever. So
no, absolutely. Because
is it about a fifth the size, isn't it? Is it about a fifth of the size of your main
is what
account?
About, sorry. Yes, it's exactly a fifth. Fifth
Right.
of the size of my main account. Yeah.
Okay, so it's a nice proportion. It's a nice proportion. Yeah.
Oh yeah, no, totally. I mean, it's small enough that I'm comfortable with being more aggressive with those funds. But it's big enough to actually be able to put decent trades on, right? Because obviously, if you go too small with any, I think when I first opened up my account, it was a bit too small. So I added in quite quickly, because there was trades I just couldn't take because the risk reward meant straight away it was over 1%. So
right.
It's big enough to matter, but small enough for me to be comfortable with being more aggressive.
Theo asked, when was it you gained enough confidence in your own analysis? But we sort of covered that off, but maybe go back and do it again.
I think the confidence comes. It's funny. Your confidence grows gradually, but then all of a sudden you wake up one day and just realize, well, I'm just. It feels like a switch, but it's not, right? I think for Theo, I think the main thing is just keep doing your analysis. Keep a journal of the trades that you take, and this is something that you told me as well. Keep a journal of the trades you don't take, the ones that you think, but you kind of go, yeah, I'm not going to take this trade. keep a note of those as well, because those as well, I think, that's sometimes the fear, right? If your analysis has kind of pointed out this trade to you, there's this, and there's whatever reason why you've gone, oh, I'm not going to take this trade. Make a note of it, because maybe the reason why you didn't take the trade was the wrong reason, right? So yeah, make notes of, and it's hard to say I'm having a log of trades I don't take, because at what point if you take a trade, that's just a yes or a no, but at what point do you look at something, but the ones that you think, oh, you're on the fence with, but then you decide not to take it for whatever reason, make a note of them as well. That's something I did as well in the early days that helped, because I think that's part of the confidence. If you can say, oh, these trades, these all would have worked out, but I didn't take them for whatever reason. Well, that helps build the confidence that actually you need to ignore that reason and stick with why you originally saw them. So that helps as well, I think. Yeah.
I think that I'm very conscious of time. You've got 4 minutes to get onto your next work Zoom
call.
Oh,
yeah, I didn't even realise the time.
That might that might be, as much as it would have been lovely to have gone on for another 30 minutes, but I appreciate you haven't got the time. But that's a nice way maybe to finish this for some people, to give them some food for thought on that, like about that whole exercise of logging the trades they didn't. It's a nice reminder. It's not something new. It's just a reminder to many people. Oh yeah, I don't actually do that. And I know Shelley talks about that sort of stuff in her sessions. But it is a nice reminder, and certainly with building confidence and all of that sort of stuff. So I think it's just been a nice little session. Thanks for coming on and talking about this. And maybe we'll do a part 2, but and we'll track how you're getting on with your Aussie New Zealand. Obviously, you just had a good run lately. But I think the point is what you said earlier on, it's, you get those good runs, but you have to put up with, all the other stuff in the middle as well. So,
yes. Yeah. No, so no, thanks for having me on. It's been a great session. I'm definitely up for a part 2, and I'm going to keep on this Aussie New Zealand, because hopefully at some point it's going to break this 10-year trend, and I want to be in when it happens.
Well, you most likely will be, because if you stick with your analysis, same with me and my euro, I know that even if the euro frustratingly turns all the way back around again, at some point I'll be in it, whether it happens now or whether it happens in October or whenever. So it will happen. So but it's just about sticking with it. Matt, thank you ever so much. You're getting a lot of love here, and hopefully hopefully we'll get plenty of people watching it in the recording as well.
Yeah, absolutely. Thank you very much, everyone. Thanks a lot, Charlie. Have a good day, everyone.
Great stuff. Ciao for now.
Thanks a lot. Bye-bye.